What's up you guys, welcome back to the Average Joe Investor channel. In this video I want to break down for you exactly how I generated nearly $4,000 of cash flow for the month of March 2024. I'll break down for you exactly the strategy that I utilize, the specific results in the portfolio, a breakdown of the income based on the different types of investments, and why this number wasn't actually even higher. Before we can talk through the actual results, you need to understand exactly the strategy that I utilized to generate this income. And I've explained this before, so if you already understand this information, you know what I'm doing, feel free to jump to the timestamp right here to jump to the actual results. So why am I trying to generate so much cash flow right now, and what is the strategy I'm using? So to be clear here, I'm trying to generate as much cash flow as possible, at least for the next 3 to 4 months, because our family is leaving on a 7-week trip from California to see the best parts of America on the East Coast. We're talking the best amusement parks, catching a baseball game at the most iconic baseball stadiums, experiencing the rich history of our country in Washington, D.C., Philadelphia, and Boston, all that New York City has to offer, and more. And while we've been diligently saving for this trip, I'm also doing the best that I can right now to generate even more cash flow so that we have options and flexibility. Okay, so what is the strategy I'm using here? The best way that I can describe this strategy is a short-term, rapid type of wheel strategy. So just to be clear here, what is the wheel strategy? I'm talking specifically about selling options when I talk about the wheel strategy. Here's how it works. We're utilizing both covered calls and cash secured puts. In the beginning, at the top of the wheel, as you can see here, we are holding cash. And holding cash right now is actually not a bad strategy because cash is yielding you upwards of 5%. So we're looking here, we've got holding cash, and when we're holding cash, we are selling cash secured puts. In a cash secured put, we are committing to purchasing shares of an ETF or a stock if the price drops to a specific level by expiration. So we're selling cash secured puts, and at some point along the way, we're going to reach assignment. I mean, we're going to get assigned the price is below our cash secured put strike price, and now we are owning the shares. So we are passing down the wheel here from assignment down to the bottom here, where we are now holding shares of a stock or an ETF. Okay. Remember, option contracts, 100 shares per contract. So if you have one contract, I now own 100 shares of the underlying stock or ETF. And at this point, we're selling a new type of option. Instead of cash secured puts, we're now selling covered calls. And for me personally, when it comes time to start selling covered calls, I'm going to be as aggressive as possible with respect to my basis. For example, let's say I'm talking about IWM, the Russell 2000, and let's say my strike price when I was selling cash secured puts was $200 per share, and I got assigned. So now what I'm going to do, no matter what the price, $199, $200, $198, I'm going to immediately then the next day sell a covered call at $200 because my goal is to get back to cash as quickly as possible. Cash gives me a little bit more flexibility, and with cash, I also get the yield on the cash and the premium from cash secured puts with Fidelity. So my goal is to then get out of the shares as quickly as possible. So I'll go aggressive on there, but in the event that the price drops, if IWM drops from 200 down to 195, I'm still going to strive to stick with my strike price or my cost basis, $200 per share for the strike price, even if it gets me less premium. If the price drops significantly, I will start to sell calls below my basis, but I'm going to do so very conservatively. And instead of collecting $50, $60 per day on those calls, I'm willing to accept $15 per day, but I'll do so very conservatively because I want to, if at all possible, avoid assignment below my basis. Then at some point along the way, hopefully sooner rather than later, we then move to the third part of the wheel here where it says assigned uncovered call, meaning that eventually at some point, the price of IWM at expiration is above my strike price, in which case I will then be selling my shares and receiving cash, and I'm back to square one where I'm now holding cash and selling cash secured puts. Now, aside from the traditional strategy, I'm doing this very short term. I'm utilizing QQQ or the NASDAQ 100 and IWM, the Russell 2000 ETFs. With IWM, I can sell options on Mondays, Wednesdays, and Fridays 3 times a week. With QQQ, I can sell 5 times a week. Monday, Tuesday, Wednesday, Thursday, and Friday. So I'm doing so on a daily basis, and I'm managing this every day right around 12:45, 1 p.m. Pacific Standard Time. It takes me about 10 minutes to manage this, and I generate more premium as a result. All right, let's jump into the results here. Okay, so we're looking at the Average Investor investment tracking spreadsheet. As a member of the Patreon community, you also have access to this spreadsheet. You can use a blank copy of this one. This tracks all of the trades that I do in the month. You can see the gross premium up here at the top, right? here, and then the net premium aside from any assignments that are potentially below my basis or above my basis where I get extra capital appreciation. You've got my goal here, which was $5,000 for the month of March. You have the daily cash flow I need to meet my goal and my actual cash flow. Okay, so let's talk through the results here. So number one, you can see that my gross premium was $4,249.83. And then my net premium after any and all assignments that were either positive or negative was $3,952.09. So I did fall short of my goal for this month. However, $3,952 is still quite a bit of cash to generate from just a portfolio of $150,000. I needed $250 per day to meet my goal. I ended up at $190.36. And we'll talk through in a second why that actually happened. Okay, so here in the breakdown, you can see that all of the investments are right here in column D, and they all comprise of IWM and QQQ with the lone exception down here of SPAXX. This is the cash account for Fidelity. I get dropped all of the interest for the month at the end of the month, which is why this trade is always at the bottom. Okay, so we talk a lot about how to generate cash flow in your investment portfolio. And some of the things that inform our trading decisions, like which options to sell, include what are the big market reports coming out this week? How will inflation or the federal interest rate decisions affect our strategy? But did you know that you could actually place trades on the actual outcomes of these events? I want to share with you a unique and first of its kind platform that is the first legal platform in the United States where people can bet on anything in all 50 states. I'm talking specifically about event contracts, and I'm also talking specifically about Kalshi. Instead of placing a trade based on the potential price change of the S&P 500 in the next week or two, you can actually place a trade on the actual outcome of CPI numbers, job numbers, changes in interest rates, how many cars Tesla will sell, or whether TikTok will be banned or not. This can be an interesting way to hedge against large market events or make money from your knowledge. So let's take a look at the main website. As you can see here, there are plenty of opportunities to potentially make a trade or place a bet on what you think is going to happen with respect to different economic policies, employment numbers, growth, housing, inflation, interest rates, etc. Let's take a look here at something a little bit more controversial, something that's pretty unknown, which is inflation this year. Let's go to the inflation trade here to say, hey, what is inflation going to be this year? So it's either going to be between 2 and 3%, or 2 and 2.9, or 3 and 3.9, or 4 and 4.9. And you can see the bet is pretty split along the way here. So let's assume that you think that interest rates are going to be between 3 and 3.9%. You could say, yes, I want to bet this one right here. So that would be a 45-cent trade. And let's say you want to risk $100. So if you're wrong, you lose your $100. If you are right, you get $122. And the great news with this market is you don't have to wait until the end of your trade when we look at the end of the year. The contracts here are going to adjust throughout the year. So based on news that comes out, so your bet may become more profitable even though it hasn't yet ended. And you can decide to take profits early, or you can wait and hold it all the way until expiration. So Kalshi is giving a $10 bonus to the first 500 people who utilize my referral code for those that want to try it out. If you're interested, go to kalshi.com/average Joe to check it out today. So to break it all down here, total cash from my cash yield was $232.49 right here. I did have 2 assignments during the month. And so this one right here in this section right here, this assignment was for a net loss of 72 cents. It's kind of a small number, so you might be thinking, well, how did that happen? Essentially what happens there is I got assigned the shares at a certain price and I sold them for that same price. However, Fidelity does charge an assignment fee that's very small in nature. So actually, technically here, when you talk about cash in, cash out of the account, net was a 72-cent loss. And then we also had an assignment here for IWM on the 27th, which you can see right here. I had a net assignment here where I actually lost $297. Essentially, I had 3 different contracts for IWM, okay, 3 contracts, and I was assigned 1 strike below my basis. So for example, if my strike was 200, my basis was 200. And then I got assigned at 199 because I had initially dropped the strike price to get a little bit more premium than I was getting. And I got assigned at 199 instead of 200. That loss was $100, but multiplied by 3 contracts is 300. And the reason why this number is actually not closer to exactly $300 is because I also had a few extra shares due to the dividend being reinvested, and that price had risen there, so that extra capital appreciation offset a little bit of that net loss on the assignment. I also received a dividend for IWM in the amount of $156.64. Let's go ahead and filter this down, breakdown based on the different investments. So we're going to look at first QQQ, and then we'll look at IWM. So QQQ net for the month, let's just see here. The majority of my trades here, you can see I had puts here, and then I got a sign here between the 4th and the 5th of March. So I went from puts to calls, and then I was selling calls here until I got back a sign, and then I finally got a sign on my call and went back to puts here at the end. So when you talk about just QQQ here, the net premium for the month was $1,099 here. And you'll notice that right here in this middle section for a part of the time with the calls here, let's take a look right about here. This section right here, where you'll notice that in column H, the delta was really low with all of them except for one. You also had it right here up here as well, where the market price for QQQ had dropped significantly, and I had initially written at my basis until I could get like $2 or $3 per contract, which was not sustainable. So I dropped my strike price a little bit to collect at least $15, $16 per contract while still being pretty far out of the money to avoid assignment. $25 per contract, $53, $22, $34, $33, very little premium compared to what I had been usually getting, which was somewhere between $80 and $100 per contract. Now let's take a look at IWM instead of QQQ. If this is a strategy you're interested in throughout the course of this video, if you're thinking, man, I'd love to implement some version of what Joe is doing here, great news, you can join the Average Joe Investor Patreon community. It's a great community of hundreds of different investors, all striving to generate cash flow, sell options, and you can learn a ton by just joining the community at that level. However, if you're looking for more exclusive one-on-one time with me to work through how to start working this strategy, understanding the basics, getting your questions answered one-on-one, then I also have 2 additional tiers that I recently opened up that allow you to work one-on-one with me every single month. If you want to learn more, check out the link down in the description below. So you'll notice here fewer contracts with IWM, and that's just a mere result of the fact that they only have 3x expirations, or 3 times per week I can write contracts versus 5 times per week with QQQ. Total net premium here for IWM, when you factor in all of the net assets, was $1,684.40. This factors in the dividend, it factors in the assignment loss here, it also factors in all of the cash secured puts and all of the covered calls as well. Really didn't have too much of a problem here with lower premium, except for right here on the 15th, I believe, and the 18th. Well, actually, I guess the right here, 13th, 15th, and 18th, where I collected on a 19 delta, a 15 delta, and a 14 delta. And as a reminder, the higher the delta, the more premium you're going to get. So lower premiums here because I had to drop my strike price below my basis, but do so very conservatively, and that's why I collected less premium. I just realized that the initial premiums I gave you with QQQ were actually just the individual contracts, not the total for all the contracts I wrote. So it's actually $2,035.20 right here for QQQ. I was using these numbers here instead of these over here, the net assets change for all of the contracts. So quite a bit of premium for QQQ, which is what you expect. You get a little bit more volatility with QQQ, and I had more contracts to write as well. So that's what March 2024 looked like. Let me also give you just a view of what the year-to-date approach is, and technically not year-to-date, it's from December through year-to-date 2024, so December 1st through April 11th, how I've done with this strategy, because I know that any one month is not going to give you everything you need to know about the strategy. It's better the more time in that strategy, you can see what things happen. And here's that view right here. You can see that overall so far collected $22,388.92. That was gross premium. I did have some option assignment drag, quite a bit here actually. That's primarily from the month of January, where I was much more aggressive, and I kind of looked at my results and decided to be a little bit less aggressive here with respect to writing below my basis. So I have this option assignment drag here on the total results or total returns, and then the net cash flow here is $16,886.26. That covers December, January, February, March, 4 months plus 10 days or so in April. Total return year to date is, year to date again, including December, 14%. That 14% was just collected in those 4 months plus 10 days. If you were to annualize my results and say, hey, whatever I've done so far, I could do that for the rest of the year, the total annualized results would be 38.43% total returns. You can see over here to the right a graph of the actual total cash along this way ever since December. You can see anytime there's a drop, that's due to assignment. And you can see earlier on in the process, especially in January here, had some pretty steep drops due to market volatility. volatility where I was writing pretty aggressive strikes below my basis, and that resulted in quite a bit of net losses here on those assignments. And really since then, I've had very little, if any, assignment drag on the portfolio strategy. For the month of April 2024, you're going to get a lot more information because I started piloting a new strategy called the Poor Man's Covered Call, which I've talked about in a few previous videos. I'm exploring that with both IW and QQQ, and I think the results are going to be pretty interesting. I think that it definitely gives you a lot of leverage to generate more income, but there can be downsides as well. So I'm excited to share that with you, my results and some takeaways that you can have if you're thinking about running that strategy. Again, as a reminder, if you're interested in learning more about running these types of strategies, selling options, generating more cash flow from your portfolio, you can see I generated nearly $4,000 in cash flow from a portfolio of $150,000. And I know that you're thinking, well, that's a lot of money, and it is. But when you think about the context of being, closer to retirement and feeling like you need to have, $500,000, $750,000, $1 million to generate enough cash flow to live on, that's just not the case. I generated nearly $4,000 with a smaller $150,000 portfolio. And you can do the same. If you want to learn more, check out the link down in the description below. Hopefully you found some value in this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a new video. That's all I got for you. Have a great rest of your day. Thanks for watching.